Thank you very much. Crypto Asset Conference OGs. I'm in Frankfurt School OG myself. I graduated in 2023 with a Master's in Management. Actually, this room was one of my lecture rooms, so very sentimental day for me today, and very happy to see it as full as during my lectures, Introduction to Finance, Operations Strategy, and all of the classes that I had during my time. Welcome to this panel on the next phase of capital markets with crypto. And I know there are a couple of OGs on this panel, but let's do one quick intro round. And I know 45 minutes for the jam-packed agenda that we set ourselves today could be pretty short. So maybe one sentence about you and what you work on. Maybe we'll stop it.
Hi, my name is Michael. I'm a CEO and founder of 360X. Before that, I used to run the R&D unit and venture capital arm of Commerzbank. And we're basically part of Deutsche Börse Group, tokenization, trading of tokenized securities, all MiFID instrument, recently partnered with Kraken and with Ondo.
Yeah, thank you. So Dolf Diederichsen is my name. I'm the co-founder and CEO of Hyphe. And with Hyphe, we offer digital asset trading to banks and brokers, mainly in B2B2C setups. And we're now about to move into tokenized securities.
Hey, Ben Duve. I'm the global head of partnerships for GK8 by Galaxy Digital's crypto custody solution. Former also Commerzbank, worked a lot with Michael there as head of custody and head of digital assets, BNY and the ECB as some of the institutional track record. So not a real OG, I would call in my crypto company. I'm not an OG for sure.
Thanks. Thomas from Trever. I'm the CCO at Trever. We provide the digital asset operating infrastructure for banks and brokers. So basically everything a bank who would like to offer any kind of digital asset-based use case would need the functionality in the background and also the connections to the players they need from the ecosystem. Personally, I have a financial background, started with Commerzbank, then spent many years in consulting banks before I joined crypto and digital assets in 2018, 2019.
And I was so overwhelmed about my master management that I forgot to introduce myself. I'm the head of business development at ECOTA. This was founded by Philipp Sander actually 3 years ago. We care about tokenization of CO2 credits, carbon credits. Benjamin, I saw your LinkedIn post, I think 1 hour, 1.5 hours today ago. And
it was a little late, yeah.
Yeah. And
Thanks
I
for
saw
pointing it out.
That both of you worked at Commerzbank, and how was it again? You put the first digit tokenization of a bond, or what was the project that you both worked on at Commerzbank?
It was that, yes, and it was 2017. And I have to say that Michael is one of the good reasons why I was able to do a lot of the DLT stuff, because he had the lab, as he described, from Commerzbank, but he didn't have a license. So we're a little bit codependent, and he needed a custody accounts and real securities. And on the other hand, he did a lot of the very interesting, very early tokenization pieces. I think probably even globally one of the first regulated dematerialization of securities, in this case debt, back in those days. So I think was a very interesting time, very long ago, right? 2017. I think also I was here the same year. Philip invited me over and I gave a speech about putting corporate actions on a blockchain to have a global registry for corporate actions. So that's how long I'm in that field. But in my crypto company, if you didn't touch crypto, which we didn't, you're not an OG.
But maybe fast forwarding 9 years now, and this is my first question that I have for the panel. What would you say? I think 2 panels earlier we heard about the big convergence. So using tokenization or tokenization being integrated into TradFi. I'm interested, do you see a big conversion happening or do you see TradFi or DeFi actually winning winner takes all market where, let me word this provocatively, do we see a colonization of DeFi methods by TradFi?
Yeah, I think a few things have changed recently. I think that the tech is now there, the legal frameworks are there. I think what existing players are still struggling with at many times is that they have an existing infrastructure that works quite well. I mean, there's a lot of business flowing through the existing so-called legacy systems that, and the question is, what's the use case and what's the need now to change and to adapt? And I think one of the big challenges is then if a traditional player adopts the new tokenized securities rails, that they still keep the cost for the existing infrastructure and they have additional cost that may be a lot cheaper, but comes on top to what they have. And that's, I think, a bit of a challenge that existing players are seeing. And in addition to this, it's also a chicken and an egg problem. So the question is like sort of, are your clients already ready and are your suppliers ready? And what is the part that you're playing in the ecosystem? And so if you make the change and the leap, the question is sort of, do your partners do as well? And that to coordinate this, I think is the core challenge. But what we see in the market is that it's rapidly changing and there's a lot of movement now happening over the past couple of months.
Yeah, I think the framing is tricky, right? Because it's the two parts to this. What is this, the intermediate version of it? So do DeFi and traditional finance compete? And I would also say that, do they compete on fees, client attention, retail adoption, and those topics, right? That's one. And then the second question is, what will be the ultimate outcome? Will the conversions be then later? And if and when, that's the question I would frame it, because right now there's a certain type of competition, because if a client, a retail client, makes a investment decision, he goes and decides, I want to invest in XYZ for a return. And he has a choice of traditional and now DeFi and other means, depending on his risk appetite, to make that investment decisions. And the more people are willing to invest in crypto and less regulated maybe, and more DeFi akin instruments and materials, they will then compete. So that then directly competes with the revenue streams and the business of the more established traditional players who offer you investment opportunities. While in the long run, it could be, do these converge, which seems like it, and you see some of the large players here. I mean, Michael works and can comment on, he works for one of the largest exchange and CSD groups in the world, right? So I think ultimately, could they all converge into one ecosystem where they all use a same kind of technology and then don't compete anymore based on the technology, because it's DeFi and tokenization versus more traditional security settlement systems and ways to move money? But do they then compete on the same technology stack for that investment? And then it's more a competition on service offering, on investment opportunities, and not on technology anymore. So it could be, I think we could in 10 years not be discussing the technology anymore, because it's the plumbing of all of the investment decisions and opportunities out there.
And Thomas, in our prep call, I think you mentioned that the settlement for the assets is on-chain, but the payment ultimately is settled via SEPA payment right now.
I mean, that's a situation that we face today, right? We have two different, I would say, streams. One is the asset stream, which is for crypto, for example, on-chain, of course. But if you are a traditional institution going into that space, have a maybe crypto offering for your clients, then you, in the settlement part, there's still the digital payment piece somehow missing, because I mean, we are discussing right now different solutions for the digital payments. It's stablecoins, it's might be CBDC, CBMT, and different forms of solutions. So we still have a fiat payment typically on the fiat side, on the payment side, cash side, which is of course a kind of asynchronous way to settle those digital asset transactions, and is still a challenge. But coming back to your question of the tokenization, I would say what we see is three waves of evolvement, I would say. The first one was the crypto market, which we've seen like several years ago, and it's quite liquid today and working. The second one would be all the digital payments, as I mentioned right now. And the third piece then is the tokenization, and all those parts play together to have a real on-chain settlement and to really realize the advantages from tokenizing the assets and having them on-chain and being able to trade them on-chain. And there's the point, like also Ben said, where we have the discussion of convergence, because if you are a traditional player and looking at those different streams and would like to go into this direction of digital assets, then you somehow have to answer the question how to do this from a technical perspective. How do you integrate the DeFi stream, which comes with a challenge that this is a kind of unregulated space where you have to find a solution to connect to? Or do you build maybe something as an incumbent yourself and provide it to the financial services industry? And I'm not sure what will be in the end, the final solution. I think there will be a convergence more and more in the coming years.
You want to answer something or? Okay. Well, it's not only about TradFi and DeFi, I'd say. It's also like a competition of the global regions that we have. With Mika live in the EU, with Trump maybe as like a crypto positive, let's say, president, with the UAE and also Singapore, also very liberate already. What would you say, what is the region, global region, zooming out, the global region most poised to provide the jurisdictional framework for integrating DeFi into capital markets? Most bullish region?
Europe is dead. That's my conclusion. Everything has to go through America. DTCC takes it all. But we still have investors in Europe. We still have people who will make decisions on tokenized securities. They don't know if it's tokenized or not. But running the numbers, you see that in the US, they are tokenizing by the end of this year. On Canton, but that's just an interim stage. They will do it on a public going forward. Secondly, all the ADRs are also tokenized. Who's not familiar, there's basically a way to sell product to the US investors. So we looked up how many of the DAX companies do have an ADR program. 100%. How many of the MDAX? 96%. How many of the Eurostock 600? 97%. The connectivity to a CSD is very expensive. It's not a question that Clearstream or Euroclear or DTC6, it's just an expensive effort to connect. And they're going to connect it only once. They're going to connect it to one who has the most product. Because Europe failed to actually get something standardized. EVPG was a great idea by lawyers, was a great idea by regulators, but no one cares. No one cares. And I was the one who held the pen on the EVPG when we talked about the first transaction in 2017 and even before. So all that regulators will have to do is look after a wind down of their regulated entities that you currently have. But there will be, of course, tokenized securities, and it will be buying that. But the FMI will be based in the US.
So Europe is that. A conference in a European city and also 3 business leaders in Europe. Do you share the same view?
Well, I like how it's phrased, Michael, because I think there's some truth to it, right? That the threat actually is there. There always has been, right? You have to see that there is already an international market, the ICSD market in Europe, which DTCC always tried to get. So there is already a market where people connect in Europe to invest in euro-denominated debt globally, and it's issued globally. So it's not only Europeans who use that one. DTC always tried to get that and didn't. But if you translate that into the more digital world, it's a new opportunity for US-based infrastructure, which actually have the US liquid capital markets liquidity pool, which is the deepest that exists, to expand into other regions of the world, right? And the question then is, and I see some here, does an infrastructure in Europe, an FMI, decide to be a, let's say, a dumb repository of the asset because it's issued there, feeds into a DTCC type or a American type infrastructure that then globally connects issuers and investors? So that's the threat, right? Or does Europe get its act together? And we can debate if it's too late or not, right? Get its act together and create a competing ecosystem where, exactly like Michael described, there's one way in, but then you have access to all of Europe. And that's actually then called a European capital market, right? So I think the threat is that we had advanced regulation, and I think we still do have it. execution in Europe lags behind the US always. And now comes the other difficulty. The moment the US moves and regulation changes, they have the money, the capital, and a different entrepreneurial spirit to really just build, right? And that changes everything, because the moment a US regulator says go, it takes like one planning cycle, which always happens in the fall for the big companies, right? And then the next year they actually execute with sums of money we in Europe would never take, because we don't take that risk, right? So I think the threat is real. I think there are potential answers to it, but it's a painful exercise to go through to really get to that truly competitive state. Otherwise, I agree, there's a lot to lose. And not to be that pessimistic, the European capital market is already run by US institutions, right? So I worked at the largest issuing and paying agent in the world, right? Most of capital is allocated through American banks, right? A lot of M&A activity, all of that is organized and orchestrated. So I don't think we lose that much. We might lose that FMI angle, but I think there's an opportunity to gain more as Europe and more independence as well. I think that's the thing to focus on.
Don't get me wrong, we still have Schuldscheine and Landesschatzanweisung.
Both of the others' perspective on Europe's speed?
Yeah, I think somehow we have the tendency to see things negatively on this side of the Atlantic a lot of times, and to be honest, I would never give up, and surely not without a fight. So I think we have a few things that are quite positive in Europe as well. We have now MiCA regulation, that's pan-European regulation for the first time, so same rules across all EU member states, which is a first, and for new types of assets and regulation in that sense. I think it's also become pretty apparent that a dependence on the US has downsides, and what we see with many activities, for example, I mean, we have this DORA regulation, everybody hates the DORA regulation, but now what you do is you look through all of your IT providers and think, okay, well, which dependencies do I have here? And do I have any kind of alternative if need be? So I think there's a little bit of a new self-confidence in the case, or in the sense that there may be a time where you can't fully depend on the US as a stable partner, and that we have seen everywhere, pan out in the sense there where you at least try to build some resilience and try to have a European identity, and that to be honest gives me a lot of hope.
So you invest based on identity or where you make money, right? And that's then the decision, right? I think there's a lot, I understand the spirit, but when people make investment decision, they look at the risk profile and the reward profile. If there's a platform which gives you superior liquidity, right? So you can exit a position and gives you same or better returns, you will use and invest in that platform. As an issuer, you go to the platform which creates to you the biggest or has the deepest liquidity pool, plus the legal frameworks that work for you, right? So I think I fully agree, and actually I'm pro-Europe. I think we still have opportunities, but we have to really get our act together and move faster. ECB, I think, makes a very nice proposition for the industry to actually save itself and avoid the downfall Michael described there. But I think ultimately it comes down to US investor go where you have the best bang for the buck, and as an issuer is where you can get the most amount of money at the lowest rate or price.
Yeah, I fully agree with you. Obviously, pricing and cost is, a key factor in making decisions. But I think there's what has happened is a reassessment of risk. And to be honest, and of course, if you have the deepest liquidity pool, that's where you try to move your money, and that's where you try to execute your trades. But I would a lot of it is connected to the US dollar's dominance as well, and that's also a big question. So why do trade between Asia and Europe? Why does that have to go through New York? That's just and a few questions are asked now, and let's see how it plays out. But I think there has been a reassessment of multiple types of risks now.
So a couple of comments. First, resilience to me means trying to go back to something you had before. So it's not something actually you want to do, because you need to predict what the future innovation brings. So resilience does not help you. It only brings you back to what you had before the crisis. Not a very good idea. Secondly, if what I believe there will be, the only reason we're doing at the moment tokenization is because of 24/7 trading. This is the only reason. The traditional technologies will catch up on that, and eventually some of the institutional people will understand that they may have to work past 4 o'clock on a Friday, maybe, but this is what's going to happen. Because at the moment you see real opportunities in these event-driven markets where attacks and so on that are terrible, but happen on the weekend or outside business hours. This is when you want to trade your position. This is why you want to really be able to support your entire portfolio and to trade it 24/7. So that's the only reason you're doing it. There will be other things going forward, but we are not there yet. There will be a hybrid market, and that's kind of the only good news. It still takes 25 years at least until things go really tokenized. So we'll still have a lot of the people that will use the traditional hybrid world, and that's good for the incumbents. That's good for everyone. So it will stay not as radical. But the new seismic shift, like how will we going forward trade on AI-driven agentic trading, is one of the major things we're currently investing in. Is that how do I allow people? And I was at the generation when I was once head of electronic trading. People don't understand that at nowadays, but it was allowing machine to machine. This is when FIX was created originally. We needed to have standard languages between computers to have orders. And we need the same thing now for having agentic trading among each other. And the whole thing about bilateral, multilateral, and so on has no relevance anymore in the space of AI trading.
Just maybe to add a few words on this, because I think both aspects are really important. On the one hand, the risk view of things, but on the other hand, the use case and the added value perspective. So coming from the risk side, of course, regulatory clarity is a good thing, because then you can be sure as an investor what is the regulatory frame you invest in. But to be honest, in Europe we had this advantage of MiCA and other local regulations, a bit fragmented, but anyway, it was there. But the other regions of the world are not sleeping. They also come with regulatory clarity, with solutions for this. So it's not, in my point of view, not really an European advantage anymore compared to the other regions. What is really important, I think, is clarity on the use case side. So what is the real use case where you can have added value by tokenizing anything and make it tradable in a tokenized way? And that's the point where we are still, seeing many activities in the market of players elaborating this point and looking for the first real use case. And as Michael said, 24/7 is one of those points, I think, for making those assets tradable and available. But then the next question is, how long does the execution take? And there I see the other regions, to be honest, moving really fast. The US is, at full speed, and also Asia is not sleeping. It's also quite fast. And this is the point where I see, okay, we have to take care in Europe that we will not be the latest, too late, too less again, to get this on the road and really realize the advantages you see here.
I think there's also a different perspective, right? If you look at the perspective of right now, except for having an FMI in each country, very limited of the capital market stack is European driven, right? If we're honest, all key players are non-European, all liquidity formation is non-European, all of that. So I think there's also something to gain, right? From that perspective, not only to lose. So I think that's a framing. On the other hand, I see this thread when Michael, or you described it, if the euro piece, right? The moment an additional currency is added to a legal entity of the DTCC in Europe, which I think they also could easily get, right? Then they have euro on the same platform. So then also that competitive advantage is gone. I think the piece to see is right now investors from Asia, from other countries, invest into the ICSD in Europe, in euro. So I understand the diversification opportunity there. The moment the DTC would allow a different currency, also that competitive advantage could be gone. But again, historically, they have not been able to capture that type of market yet. So I think that's something to keep in mind. I think the tokenization use case is very clear, right? How to cheaper, faster, easier move things. The problem we had in Europe is everybody built their own little piece, and then we come back to the investor. Who invests or issues into an environment where there's less liquidity, right? And where there's just less of everything, and it might not even be cheaper because it doesn't scale yet, right? And I think building that is the key and the most difficult one, and we have failed at that because we didn't get it's like the payment schemes. We haven't managed to have a whole European payment scheme, and we don't have a integrated capital market. Those are the challenges, and that's why it doesn't succeed yet, or can succeed, because nobody wants less liquidity.
So now I need, with less than 18 minutes to go, I need to switch to a more positive tone. Otherwise, people will kind of not come anymore next year. So I think first of all, we see some efforts because historically payment has been run by Bundesbank, technically, and security has been run by H1, thanks to Herr Müller. So on Cascade. And people are trying to innovate on that basis, but with the advent of some of the stablecoin issuers like Stefano and his team from SocGen, this is real opportunity for change. Having it on the same platform, they could just as well do normal payment. They don't need a blockchain for that. So just having, if Bundesbank would start settling securities, it's the same thing. Maybe they don't want that, but I think there are some innovations also happening there. So it's not just all fiat, but there are innovations coming on the stablecoin side. By some of the France, but also some of the German entities. I think Alex is also here today. And one of the things, it was mentioned that Mr. Trump, President Trump, is so positive on crypto. Let's hope he never visits Amsterdam. Because if you want to do yourself a favor, everything related to crypto is only happening in Amsterdam. Really, really massive. It will be even bigger for him than Greenland. So I really think if you want to have yourself a favor, travel to Amsterdam, try to see 2 or 3 of the players there. This is where real innovation 2026 is happening in Europe when it comes to tokenization.
Okay, Trump traveling to Amsterdam, the positive note that you wanted to end on, okay.
That's where the liquidity sits, by the way, right? Amsterdam is where the liquidity, the onshore liquidity in Europe sits. So you already see that connectivity right there.
You see this panel doesn't need a moderator. Pretty happy about that. But since you mentioned the 18 minutes, Michael, we wanted to open up the panel to questions from the audience. I have some questions in my book, if there are no questions from the audience, but we would love to discuss about your questions, if there are any, in the last third that we have of our panel. Are there any questions? And I will come with the microphone. Yep. Hand you the microphone and you can ask your question.
Great, thank you. That was a very lively panel. Really enjoyed listening to all of you guys. I wanted to ask one question. We talked a little bit about tokenization and potential convergence as well. Kind of flowing in from the previous panel. So let me ask you this: what do you think comes first, or which one do you think will come first? Will a stock exchange buy a crypto exchange, or will a crypto exchange acquire a stock exchange?
There is no difference. There is no difference between a stock exchange and crypto exchange. It's an exchange. It's just how many products do you trade. So you're going to see Kraken or some of the others trade equity in a tokenized and non-tokenized form. And you see Deutsche Börse trade from a trading perspective. All my comments on DTC was related to CSDs. On the trading side, totally different. They will also, already today, 3DX, I think one of the sponsors, is trading crypto. So Deutsche Börse is. So what is the difference to me is then just at the moment valuations of US exchanges are higher than European ones. And that is due to many factors. Yeah. It's not a question who will buy who. It's just Americans are higher and it's not about crypto or non-crypto. It's the same.
You got the client on, but you see that already now, right? You got the client onboarded and you just offer them an increased range of products. On the institutional side, same thing, right? You have an institution onboarded on your exchange. As Michael pointed out, even exchange connection costs money, right? Why not leverage that connectivity and that client relationship, credits assigned and so on for other products? And the same goes on the crypto side. almost every, and I now 1 year travel to, I think almost every major crypto conference, everybody wants to see new products come online, and the new products are the traditional products they don't cover yet. So they have you KYC'd, right? They have a way for you to fund the account. They want you to not only buy crypto, but also to buy everything else. So I don't think it's really about buying. It's more about the expansion of the product suite, as Michael pointed out, and the ability to serve to get as much of the wallet that a client has available for exchange trading.
I mean, we at the moment are already kind of on-ramping prediction markets. So, you have to think what is happening next year. So I prepare my speech for 2 years from now.
Yeah, maybe one thing to add, while I not disagree, and I think that really it's an exchange is an exchange, and the products that they're trading, they will expand, and basically everybody will try to offer everything. I think what is fundamentally different is sort of the culture, the legacy technology, the software stacks that they're using. And there I'm most perplexed by the new AI tools, and especially sort of what has been happening over the past 3 months, 6 months. And basically, if you look at a bank or an exchange, it's sort of, the big expenses are threefold. It's number one is everything regulatory related and the paperwork and fulfilling regulation. The second one is basically paying for data and sort of and these connections and connectivity. And the third one is basically to the people to run these things. And now with the AI tools, you suddenly have the opportunity to rebuild things from scratch much quicker and much cheaper. So the cost of software is basically zero. So if you have the regulation already, now every time you pick a new software vendor, you really look, okay, do I need to buy this expensive software for compliance reasons, or is there a way to get a cheaper solution, or to have an or homegrown solution much cheaper and much more effectively? And I think they will massively drive down the cost for regulated players. And there, I think if you start fresh, if you have a relatively new base that is cheaper by definition than one of the legacy players, there is a cost difference. And in the end, we learn cost matters. So where do you get the cheapest offering? And there, I think the world is about to change massively.
What are your other questions from the audience?
Michael, a question for you. No, joking. What about the German dimension? We will never be, most likely, and Michael's comment pointed in the direction, the leading financial market of the world. What will crypto bring us in Germany? Will it be a Deutschland AG 2.0, or where do you see special implications of tech innovation for Germany?
Investors will be able to utilize directly products that so far were privileged only for institutionals. So it will be good for the people. Just the infrastructure is not run by European companies, and definitely not by German companies.
For a German player, I just want to make sure you remember.
Yeah. Also, that is to me, it's still a bit annoying. So we built our company. We then got sort of a crypto license. We got MiFID license or MiFID license in Germany, and sort of to see how fragmented Europe still is, and how much focus there is on Germany only, and how hard it is also to sell to a company in a different EU member state. And that drives me nuts. I think that's really where we're shooting ourselves in the foot. And there's so many things that still need to be harmonized. I think gears are turning, and people have this vision and work on this, but the pace, I think, needs to be much faster. And then I think the question is less about, okay, what's Germany's position, but how can we compete on a European level and leverage the scale?
Other questions from the audience? Otherwise, I'd ask you, we talked about benefits, so 24/7 or 24/5. What do you think of stablecoins? Is this the kick-ass tokenization solution that will drive the adoption among institutions?
It depends where you sit, right? If you're an American company, yes, because you don't have an alternative, right? There's no CBDC by presidential directions to use or to work on, right? But then if you're European, there's already alternatives. The question is the pickup, right? The Pontis will be there, so you will have access to central bank money, as another option as an institution to use. Let's see if that's relevant or not, right? But there could be alternatives, and then there could be an ecosystem where both exist. But if you're US based, if you're in the US, no, because there is no CBDC, right? So there is no alternative to stablecoins.
I think the stablecoins are an essential part of the digital payment side of things, which I mentioned initially. And yeah, as Ben says, in Europe or in Germany, you have different kind of solutions for digital payments. Stablecoins, for sure, I'm sure at least, will be one of those means of payments. But there are also CBDC, there are CBMT initiatives, and there are other forms of digital payments. And I think there will be different use cases based on different payment schemes or payment solutions in the future. So they will coexist somehow also in the future. I think that it will not just be stablecoins. But for me, the more important questions with stablecoins is, I mean, I see the interest in the market. Many traditional players are watching what can you do with stablecoins? How do you operate stablecoins? Who will be the next to issue a stablecoin? I mean, there are many issuers in the market. But the essential question is for me, what is the first use case for a stablecoin from a European or German perspective, right? And then it will be more difficult, I think, because then you have to distinguish between the retail side of things, where, to be honest, I don't see that much use cases, at least in Middle or Western Europe. And you have the wholesale side or the B2B side. And there might, of course, be also use cases in Europe to for the stable coins and also for other means of digital payments. And that's, I think, at least fostering the interest and the attention on the payment sides, which comes now driven from the US stablecoin initiatives.
Yeah, maybe one thing to add. So we're obviously looking at the stablecoin market quite actively, and sort of talk to most of the players. For us, the question is like, our clients are banks and brokers. They have bank accounts by definition, so they're very comfortable in fiat. And to be honest, I think for them, fiat is not the issue. I think the fiat rails have a lot of issues. That's for sure. And for us, whenever we trade and settle, usually the banking side is the annoying part, where sort of money is gone for 8 hours and you don't exactly know where it is. And also, like, on Monday it works and on Tuesday it doesn't. And so that for sure is an issue. However, I'm not sure that privately issued stablecoins are the solution to this. And for us to integrate the stablecoin, we would need to assess the whole thing. We would need to sort of see what kind of risks are there, and we definitely need the institutional uptake. So it doesn't make any sense if we adopt that, if our partners on both the client side and also on the trading partner side don't adopt it at the same time. I understand it's a huge use case for the issuer of a stablecoin. That's easy to get. If you issue a few 100 million or a few billion and you get interest but you don't pay interest, that makes sense. That part I understand. But what I'm really waiting for is really central bank issued stablecoins, because why don't we have this digital euro? And I understand that there's the risk around it, but to then start with a retail proposition, that makes absolutely no sense for me to have a sort of a central bank issued personal stablecoin that every citizen has in the wallet. That makes no sense. While at the same time you have a regulated banking network where you could introduce it as a wholesale version too, and would solve most of the problems on the fiat side, which I think would be very welcomed and would add a lot of value. So here I would really love to see some action from the politicians and people in charge.
Okay, how can I squeeze in all my answers in 5 minutes? 1 second. So first of all, use case, we at the moment already settle against stablecoin, all of the securities that we trade on our platform. So there's the use case. I'm now leaving capital markets, but I think there is one fantastic use case in Germany which will drive stablecoin, and it's called SAP Stablecoin Hub. Every company that uses SAP can ultimately use it for payments, and it doesn't need a bank anymore. And that will be the real driver, because using an ERP system is something that is magnificent. You can wire immediately, and the little FX exposure that you can do at the end. But the way, if you're running an enterprise and you're using SAP, whether in particular HANA S4, then you really have a case for stablecoin. But that's a payment side. That's not a capital market side. That's why I'm so negative on capital markets. But that's a very positive side. I traveled in 2008 2018 together with Bundesbank board members to China. And they said, oh, we're going to do CBDC for retail. And the reason is because we only have 2 payment apps, and if one fails, we need to be in control. That was the answer why they wanted to do this. So as we are gradually moving into a more PayPal-ish or that Vero-like way, I think the government could have, for stability in the EU, a good idea about, and that doesn't now matter whether CBDC or stablecoin.
Okay, then my last questions for the last 3 minutes. There was someone from the executive board of the ECB holding a talk this week. No, not Benjamin, it was an old occupation, but the talk was titled Building the Rails for Europe's Tokenized Financial Markets. And one of the numbers that were mentioned in the talk was that 4 billion euros of bond issuance was done on-chain in the EU since 2021, which in the grand scheme of things is nothing.
How much?
4 billion euros. So for the last 2 minutes, 45 seconds, what would you say, as the bond market being sort of like the pulse check of the capital market, what would you say are the last hurdles that we need to take to actually grow this share?
We just had that discussion before. As an issuer, you go where there's the deepest liquidity and the cheapest interest rate for you. If it's a fragmented small liquidity pool, that's all the places where you currently can issue tokenized bonds, or you go to Clearstream or Euroclear and do it on their platform. Why would you do it tokenized? Why would you do it the traditional way? I mean, that's, except for marketing, there's no upside. So that's why that market hasn't grown. So what we actually need is an integrated, deeper liquidity pool where the issuer can go to and then have actually an advantage of out of tokenization. For that, you need the buy sides to be on their platform. So I think it's a very straightforward proposition from my perspective.
Just by, I asked the question, so 4 billion you said, right? So Kraken did 25 billion in tokenization on X stocks.
Yeah, that fully reflects, I mean, the relation between the figures. And yeah, it's for me as well quite simple. You need the liquidity in those pools. Otherwise, it will not be an advantage to go into the tokenized markets, and that's the key. Where we are working on, and what also the statement of the ECB was related to.
So I'm not disagreeing. I think you're right. So there is a huge network effect of the existing infrastructure. Everybody's plugged into it. So the question is, how can we kickstart and thereby kick off a new network where these players are plugged in on the new rails? And that's also what we're trying to contribute to.
And this is where we leave this panel for good for today. I'm happy to further discuss this after our panel. So thank you very much, Michael, Dolf, Benjamin, and Thomas for the participation, and see you around. Talk to you soon. Thank you.